Mr. Mann's on before. This is the first time that we're doing a space together, so I'm pretty excited for it. We are going to have another space following up after this one as well with some pretty great speakers too. So really excited for this. We'll get a little bit of like FOMC debrief. We're going to talk about some setups and pieces for tomorrow that I think should be interesting as well. And yeah, I mean, we'll kind of take it in whatever direction we want. We may take some people up for questions as well, kind of towards the latter portion of this. We'll see how the beginning of this goes, and then we'll take it from there. But I just shot Mr. Mann's a invite, and so we'll see how fast we can get him in here. I see we got stock market news in here. What's up, Evan?
Yo, what is up, dude? What are we doing?
We're good. There we go. We got Mann's in here.
What's going on?
Happy Jerome Powell Day.
Happy Jerome Powell Day. What's going on, guys?
Doing good. Appreciate you joining up. Good to have you on. I've kind of seen you all over Twitter for a little while now, but excited to take it to spaces.
Absolutely. Excited to be on with you guys.
Perfect. So I'm going to go ahead and I'll tweet out that we're live and just tag you in that. But while I'm doing that, would you be able to take a couple minutes here just off the bat to kind of introduce yourself to the audience and give a little background on what you've been doing and how you've been building on Twitter?
Yeah, absolutely. So what's going on, guys? I'm Mann's, obviously. I started trading options about 2 years ago. I've been trading for about 2.5 years. I started with, no real following on Twitter, but then, really got enamored in the FinTwit space. And then, just over the last year, I'm sure you guys have probably seen some of my videos on YouTube. We've got, a growing platform over there as well. Obviously, probably some of you have, been in the Patreon and things like that. And we have a big educational space there as well. So, it's been a really crazy last 12 months. Honestly, I think I was sitting at like 15,000 followers maybe this time last year. And so it's been an insane year of growth. Obviously now almost 90K and, just a growing space on FinTwit, which is awesome. And I love to see it. Even in a bear market, we're still putting out really good content. And I love to see the space growing as a whole. So it's been a really fun to be a part of it.
Love it. How did you get started in the world of finance and investing? And how did you kind of find your niche?
Yeah, absolutely. So I actually started as a finance major in college, undergrad. And then the year that I graduated, 2018, 2019, I started kind of getting involved with stocks a little bit. We had a Bloomberg terminal at our school. And, it interested me. I definitely wasn't taking it seriously in terms of like, short-term trading yet, but was, kind of got interested in stocks and, of course, downloaded Robinhood, right? And got like a little bit enamored in the space. And then, COVID happened and, I didn't have an internship anymore and I wasn't really sure what was going on. We were locked in the house for like 4 or 5 weeks. And so I just started trading, on my own. And then I started searching the tickers that I was in, like whatever, random biotech was hot with COVID happening. And then I ended up seeing that people talked about this stuff on Twitter. I'm pretty sure I originally started like looking on stock twits, which is like, if you're a little bit older, maybe you kind of remember that when that was like popping, right? When those message boards would be really active. But then I, got enamored in Twitter, became friends with Hugh Henney and a couple of other guys, obviously trading small caps at the time. And then that's kind of, that progressed into trading large cap options and, then really started making content over the last 12 months. So it's been a fun journey for sure.
Love it. Yeah, definitely a similar journey. Kind of in my eyes, finance major as well, going through the college system, finding this growth of the market. So I'd love to hear kind of your thoughts on where we currently sit, right? We had this giant bull market in 2020. We had rough seas, but ups and downs throughout 2021. And now we've just been falling in 2022, kind of culminating with, breaking the anchor VWAP from COVID lows to this week, as well as the FOMC meeting with a 75-point rate hike. So with that all kind of coming in, I'd love to hear kind of how your strategy has adapted and morphed over the past 1 to 2 years to where it is now and where you're searching for opportunities in the market.
Yeah, absolutely. So, I think this is a really interesting topic right now too, because there are so many people that got accustomed to a low interest rate, right? Very like, QE aided environment, right? Which was, we've had a low interest rate environment now for a very long time and thus one of the biggest bull markets ever. And coming out of COVID, you saw more liquidity than ever enter the market, right? People were getting, $1,600 to sit at home, right? Free money, and stocks were hot. And I think you just saw an over exuberance enter the market, right? You have all these different platforms now that were promoting information about stocks that wasn't, readily accessible unless you were looking for it. Now you have like TikTok during COVID that, brought so many people into the space. And I think you just saw an absolute, kind of euphoria market, right? And now reality's kind of set in, right? You can't print, that much money and not expect there to be an inflationary environment. And, I have been kind of prepping for this. Luckily, I followed some good people on Twitter. I actually one of my first early follows was Investors Live, which he is Nathan Michaud. He runs a room as well, and he's like primarily short bias trader. And I got pretty lucky with the fact that it really interested me, and the fact that you could make money both ways. Because the first 6 months of trading, I didn't even realize that there was so much opportunity on the downside. And a lot of times those trades are a lot smoother because they're not as crowded, right? Because a lot of people have that thought process. And once I got involved in that, I really started to find some good opportunities to the short side. Last March, I had one of my largest short side trades ever the day that Coinbase IPO'd. I think I shorted Riot for $21 a share, something insane like that. And, I really got interested in some of the short side trades after that. And so luckily I've been, trading the short side now for a little over a year, and I'm comfortable with it. So once we started to see, that initial correction started, I think there, were initially a lot of really nice opportunities short side. And, now we're dealing with an environment that is a lot less liquid, right? So with higher interest rates comes less liquidity, right? A lot of people selling their stocks, et cetera. And so that now that there's lower liquidity in the market, you have to be even more selective, right? And I think that's one of the biggest things. So as of late, I've really been looking. Some of my biggest trades have been catalyst-based events, right? Like when the market took that original big downturn end of last month. For whatever reason, I decided to make this trade public, but I took Amazon calls for the split at around that $2,000 level. Just saw an opportunity where, hey, I know retail is going to be interested in this split. Ended up going a little over 1,200% or something like that. So it's just finding those events that are maybe not being looked at as, for what they are, right? Because, a cloud gets over them. But, once you can find those, diamond in the rough, quote unquote, opportunities, you just have to make the most of them in this market. I think that's the biggest thing, long or short.
Yeah, let's talk about identifying those opportunities. What would you say is a replicatable system for finding these opportunities?
Yeah, absolutely. So what I like to do is, I'm pretty big on the sentiment gauge is a big one, right? So I like to look at things as a broad spectrum, right? As at some point the market gets overbought and the market gets oversold, and that week especially, we had a really big move down on Friday. And one thing that I've been doing a lot lately is looking for those days that people kind of get caught on the wrong side. So for example, if you remember, so I'm referring to, I believe, second to last week of May, QQQ had tested, I believe, the 285 level, and we initially broke below that level on a Friday, and then we saw that big rally into the end of the day and actually closed over that. And I kind of felt like a lot of people got trapped on the wrong side because they saw QQQ's most recent low point break. And I think this market likes to punish the most amount of people at one time. This is a very unforgiving market, and one that if you're not careful and really smart about your moves, you're going to get, taught a lesson really quickly if you're on the wrong side. And I think that you have to look at opportunities in this market where people are getting caught on the wrong side and, take the other end of that trade and look for the opportunity there, right? So, obviously I'm really big on using, key support and resistance levels on, larger time frames, especially in the lower volume market. And looking for those times that you see people, that could have been the same exact scenario to the long side, right? Maybe, it happened, not last week, but the week before, I guess. We were having that relief rally. SPY broke out that day at the end of the day. And then, it was a fake out breakout. The next day we dumped 5%, right? So a lot of people got trapped long, and there was a lot of money to be made on the other side of that trade. And, I didn't get that trade, but there are a lot of opportunities like that where you look for, okay, the market is kind of designed right now to be hurting the most amount of people, right? So really trying to identify those, not contrarian, but just times where you kind of can witness those opportunities take place, I think is really, really important right now. That kind of makes sense?
Yeah, I want to dig a little bit more into, once you kind of discovered some type of opportunity, how you go about playing it. Are you typically more option oriented or common
Yep.
stock?
Yep. So what I actually do is right now a mix of both. So what I'll do is I'll take a larger equity position because in this market, I think that equities are a lot less stressful to manage, right? With lower liquidity in the market. That means that the options market is also going to be less liquid. So what I've been doing is on those bigger picture opportunity trades, I'm usually looking to play a month out in terms of expiration. So right now it's, June 17th, right? So I'd probably be looking, if I was going to take advantage of something long or short, I'd be looking at the end of the summer. So mid-July or late August. And then I'll usually play the equity side of it as well. Just because I feel like I can have more size there. And kind of let it work, if that makes sense, and don't have to be as stressed about, okay, well, if we have a massive day not in my favor, then the option is going to be down 40%, right? So there's a balance right now when the market is highly liquid, right? And the market's crazy and there's a lot of big moves happening. I think that you can size heavier into options. But right now, I think it's for me, it's worked best to use a mix of both equity and option, and just using those further out expirations if you do want to take size and see one of those bigger picture opportunities through.
Got it. Okay. Let's talk a little bit on actual, key support lines and kind of how you deal with finding support and resistance on some of these. For example, let's talk SPY and the Qs first, since a lot of people will be using these. SPY sitting right now at 379.3.
Yeah.
Walk me through how you would kind of draw support and resistance, and maybe if you're using any multiple time frames, just kind of walk us through those too.
Yeah, absolutely. So right now on SPY, obviously we've had such a drastic move, even from last week, right? Like before the CPI data came out, right, which really set the tone for the environment that we're in. We saw a massive consolidation period, right, which everybody kind of knew we were going to see a big move after, I believe it was 7 or 8 straight daily candles. Like if you go back and look at the SPY daily chart, which is always where I like to start, you'll notice that we had that massive period of consolidation, right? So between that 406.70 level and the 418.13 level, right? Clear resistance there. And then obviously, clear support at the 406.72 level, right? We had 2 straight daily closes there, June 1st and 2nd. And then obviously we tried to get that upside breakout on the 7th. We couldn't. And then it's been that waterfall down since, right? So right now on SPY, the biggest area that I would be paying attention to if I was trying to really take advantage of SPY itself would be to look at the most recent local low. So if you go back and look right now, that would be that 380.70 level, right? So today we tried to make an attempt to come back over 380, and that was our prior low, right? So May 20th May 20th, we touched that level, right? Briefly, that's the day that I was referencing, right? So you see that big wick down on May 20th.
Mm-hmm.
That was that Friday that I referenced the Amazon opportunity, right? And the key with that day was when we saw that big wick down to 380 like that, but you have to pay attention to how the candle closes, right? That's a really important thing, is to understand, okay, yes, we touched that level, but the daily candle and the weekly candle, because that was a Friday, closed over SPY's most recent low before that, which was that 384 zone, right? So since we closed over that, the way that I took it is with that big long wick, you had a lot of people trapped on one side. So that was the opportunity I was referencing there, right, with the Amazon swing, et cetera. And then right now, the key is going to be reclaiming where that wick touched, right? So in that 380 to 385 zone is now a major area that we may see supply come into play, right? So you talk about, basics of supply and demand. If we can reclaim that level, right, then we have probably a pretty good chance to at least see that 400 area get tested again, because that's a major psychological spot. But if we continue to reject that low in that 380 to 385 zone, right, you would obviously more than likely see a further downtrend take place, right? So really that 380 level from that wick on May 20th would be that key support that I would be paying attention to, and I'd be looking for a daily close over it, which we got over 380 briefly today, but could not close that candle over. So it's going to be interesting tomorrow.
Okay, perfect. What about on the Qs?
Yeah, the Qs. It's actually interesting because SPY and QQQ are it's weirdly correlated where they've been trading at like, SPY's been at 379 and QQQ's been at like 279. It's been almost exact, but today they disconnected a little bit. So today is interesting. So QQQ actually closed over that prior local low, which was that 280 level, right? And again, on that May 20th candle, that's a big area that I would be paying attention to right now, right? Because that was that reference point for the last time we had a relief rally, right? So I would be using this as a point of confluence. Okay, if we can consecutively close daily candles over this 280 zone, really over 285 is a major bull point. If you can close over 285, because you have a lot of candle bodies closing over that area, you've got a really good shot to see a relief rally because that's going to signal a broader term reversal to traders, right? Whereas if you continue, maybe, today we did close over that 280 point from the 20th of May, but if we just give that right back tomorrow, to me, that signals that further weakness. So one thing that you can take out of the examples we just went over is that, okay, well, tech is starting to show, or, maybe that, growthier side of tech, right? QQQ is more weighted in some things that are, more growth oriented, right? Are starting to show a little bit of relative strength compared to SPY, which is going to be, a lot more of that mega cap tech, right? Even though there is a lot of mega cap tech in QQQ as well, the weighting is a little bit different once you get past Apple, Microsoft, et cetera, which you're seeing more strength and growth right now, right? Like the past couple of days, Rivian is 9%. Company like Apple is, I think just over 1% up the last couple of days, right? So you're starting to see those names that are down 80, 85% start to get some love again, at least in the short term. Does that kind of make sense?
Yeah, I definitely see what you're saying with the close over that level of, from the May 20th.
Yeah,
I think that's a pretty important thing because obviously that's our recent lows. So
right.
closing above that, certainly bullish. In the short term, what I
Right.
would like to see happen, do you use anchored VWAP at all?
So like you're talking about like COVID low, like anchored VWAP from on SPY, you mean?
Or even a more recent one, it's those recent lows. What I'm looking at is basically just tagging a anchored VWAP onto May 20th for each one.
Right.
And looking from there to see, are we able to get back above that? Because that's back up on the Qs closer to about 296.
Yeah, so I personally, and this is a personal thing, but I do not use anchored VWAP as much. I know some traders that I respect, really, really well, like Jake from TrendSpider. He's really good, and I know he's a big fan of the anchored VWAPs. Personally, I don't use them as much because I've found success without them, and I've incorporated them some, but. I really like to use those local low areas as confluence points, especially in a more bear market. I want to see confirmation over that most recent low point, and that's really the area that I try to pay the most attention to, if that makes sense, in terms of like indicators and levels. For me, I'm really big on kind of what has worked for me. Does that make sense?
Yeah, are most of these trades that you're placing quick scalps or some of them swings? What have you been doing lately?
So honestly, I was absolutely like more of a high frequency intraday scalper. The last year really. But honestly, the last 2 months have been a lot slower in terms of volume that you're seeing on things, right? Especially in not even just in growth, but kind of market wide, you're just seeing a lot lower volume. I think SPY and QQQ traded their lowest volume days during that consolidation period last week. And so I would say that the most successful trades in terms of percentage and profit for me have been some of those bigger picture ideas, right? So like Amazon, I had Amazon puts over the weekend. This past weekend, those paid like 500% on that gap down. And then I am scalping intraday still, but I'm definitely being more selective about the opportunities that I'm looking at, just because when volume is lower, I'm a big volume based trader, right? Like I really, really like to pay attention to relative volume on those larger time frames, right? So some of the smoother names to be scalping intraday have been, the names that either beat earnings or they have a good news come out and they have high relative volume.
Okay, perfect. Are there, a lot of people, especially in a market like this, they have kind of their favorite names that they gravitate towards, maybe 5 to 10 stocks that they're consistently trading. I've seen people lean into a lot of, Tesla, AMD, Amazon, in conjunction with SPY and SPX and all that. Are there specific names that are kind of consistently on your list that you're leaning into, and why would they be on there?
Yeah, absolutely. So one name that I have been focusing on, like really the majority of my trading career, but is NVIDIA. And so I'm a big proponent on that method, right? Which is if I was starting trading all over again, right? I would always say one of the first things I would tell myself is don't try to learn how to trade every stock on the market. Focus on one or two names and become like really good at understanding how that stock moves, right? Because every stock ETF, they have personalities, right? And especially individual stocks. And learning those personalities and understanding what type of days, how interest rates, like when the 10-year yield goes up, right? A great example is like a stock that I used to trade a lot. I don't trade it as much because the volume is much lower, but is a firm, right? And a firm was trading at what, like, $180 a share at one point, right? But it was always a really smooth name to trade because when the 10-year yield was up, a firm was usually a pretty easy short side opportunity because it reacted negatively to rising yields, right? Whereas if yields were down, it was a pretty good long opportunity because it seems like there's just, better volume to the upside when those yields are lower on something like a firm. And it's one of those names that's very highly correlated to how yields are moving. But for me, right now, NVIDIA has been a major one that it's kind of my go-to. QQQ has had a lot lower volume lately, but still been taking some advantage of some opportunities there scalping wise. But NVIDIA, Amazon have been kind of two that I've really been trading a good amount lately. Roblox is another name that I always have on my list. And personally, that one has been nicer to trade because they originally dropped on that last earnings report they had, but the earnings report was actually pretty solid from a fundamental standpoint in terms of monthly active users, et cetera. And they had a really, really high weekly relative volume. And so that was a really nice one to trade throughout the early part of June and all of May.
Do you have a long-term portfolio that you hold in conjunction with your, more engaged day trades?
Yeah, absolutely. I've actually, in the last 6 months, started allocating money to a long-term portfolio and buying some things that I like. Obviously, trading and investing very different. But yeah, I have just recently started allocating money long-term.
What are some of the names if you're open to sharing, and why have you, I guess, what do you like? Are you looking at valuations? Are you looking at technicals? What's going into that?
Sure. Yeah. So one thing I'm paying attention to on names I do like, because personally, the way that I got very lucky, I was really tempted to start a long-term portfolio in December of 2021, right when everything was just absolutely like going, not this past December, but sorry, December before that. And everything was just, I just kind of looked at all the charts and I was like, everything is straight up. I feel like this is not a good time. Right. And I wasn't as informed as I am now on yields and rising interest rates and things of that nature, right? But now that I am, and now that a lot of the stocks that I do like are down 80%, I've started allocating some money into them, especially on good trading days. I'll always pull out profits and start allocating money into long-term stuff. So a couple that I've been buying as of late, and I'm just starting to buy, right? I have it. It's not like I'm taking, and putting my life savings in any of these, but Lucid. SoFi is one that I have been accumulating for a long time. SoFi is probably over the past year. But recently I've started positions in Rivian. I actually bought 200 shares of Zoom after their last earnings report because Zoom had really good growth year over year. Their guidance was great. And I'm looking for companies that are beating earnings that I personally like the business model anyway in this market. If a company is beating earnings and seeing a positive reaction, because that is so incrementally hard to do right now with the market environment that we are in, then I'm going to be looking at companies like that as long-term portfolio adds, because I think that the companies that are showing relative strength now after earnings in a tough economic environment, when the tides do shift, and they will, right? That's just the cycle of life and the cycle of the market. They're going to be even stronger. So I've been looking for those names that I do like. So Zoom is one. Rivian is the other. And Rivian is one that I love because right now they trade at a $28 billion market cap, $27 billion market cap. And of that, they have 18 billion in cash and a 1.5 billion burn rate per quarter, each quarter right now. I think personally, those are, at the valuations they're currently at. When it was 150, Rivian didn't make a lot of sense. Of course, it's a larger market cap than Ford, right? But Down here in the 20s, I've definitely been taking some starters on my long-term portfolio on companies like that, right? And Zoom is another one that's kind of like that, down 70-80%, right? So they become attractive to me down here.
Yeah, Zoom's an interesting one. Like you said, down about 70% over the past year, but held up pretty nicely the last 3 months.
Yeah, and especially the last few days too.
Yeah, it's been pretty solid, up like 20%. It looks like over the last week or two.
Yeah, and that's a good thing to pay attention to. Is exactly what you just said, right? The market was down 10% the last 3 days prior, right? Friday, Monday, Tuesday, and look at what Zoom did those days, right? It held that 100 level. It's been very, very strong.
Got it. Okay. All right. I want to touch on it because it's in your bio. Give me your thoughts on Bitcoin.
Okay, this is an interesting one, right? A big topic right now. So long term, I definitely believe in the blockchain application, right? I think that crypto is definitely going to be a major part of our society in the future. I think crypto, and honestly, I'm only 25, so maybe this sounds a little off, but it kind of reminds me of what I heard going on in the .com bubble, right? Which is you've got all these internet companies, right? But there's only going to probably be 4 or 5 that are really the leaders in the future, right? And so I think people naturally gravitate towards Bitcoin, Ethereum, etc. Personally, I think Bitcoin will be a good long-term asset to own. But I think you have to be very careful about buying into euphoria, which is what we've seen over the past 12 months. And you have to, Bitcoin runs in, pretty consistent 4-year cycles, right? And so for me, I don't own any. I own a very tiny little bit that I bought in the 30s, but just a very small amount, kind of to remind myself to buy, a little bit more for the long term once it got nasty. But in the 19, 18K area is definitely going to pique my interest, but it's a different environment now. High interest rates, it's a growth asset, right? And people don't like risk on assets, in high interest rate environments. So you have to be careful.
What about the rest of the crypto ecosystem?
Yeah, so honestly, I personally feel like that's the thing, right? Is there's probably, in my opinion, I think the landscape is going to change so much. One of the best ways that I see to get exposure to that is to own something like Coinbase, rather than trying to pick out all these individual cryptos. Is owning the exchange on which they are traded, which is another really attractive one, right? So I think Ethereum, I understand the applicability, but there have these really high gas fees, right, which makes transactions a little bit more complicated, right? I think that the NFT space was a nice validation use case, right? But to me, I think that Ethereum has a lot of problems to fix. Solana is interesting, but again, it still has problems just like Ethereum, right? So I think that you have to really, really be careful in crypto, especially you're witnessing, the collapse of something like Luna, which a lot of people trusted, right? And it's one of the bigger collapses that we've seen, in this age range, in our time. So it's just, you have to be super, super selective. And for me, I feel like the risk is just, I'd rather have money in Bitcoin than any of the others.
How much of your portfolio ends up in cash at the end of a typical day?
90 to 95%, and that's a very strict rule of mine.
Do you trade pre or post market?
I did when the market was hot. So like the last time I remember the market being hot enough to be up 4 a.m. is usually back when I think the Trump stocks were going crazy, like DWAC and all those names, right? Sometimes I'll take a little flyer on something, but oftentimes, it's just not that type of environment right now. It was a year ago, but it's just not right now.
Got it. Okay. Let's talk about FOMC for a second. If you kind of want to give some of your thoughts on coming out of that today with the 75-point rate hike, thoughts on how Jerome Powell handled that and what it means for the general market direction moving forward.
Yeah, so absolutely. I think that, we've really faced a really serious issue with the last CPI report that came out last week, right? I think that, we've tightened, and now I think we're expecting to start to see some results and inflation subsiding, right? But you're seeing actually kind of the opposite, right? You're seeing inflation kind of take hold even more. And inflation is such a nasty bug, really, is kind of the word for it. I think that they did what they had to do today with the 75 BPS hike, right? So hiking by 75. I think they knew they couldn't do 50 after the last CPI report came out. You're still seeing shelter inflation, so like home prices, as a major contributor towards inflation. So I still think there's probably work to do in terms of home prices, right? We haven't really seen. You're seeing mortgage rates start to really move, and that's eventually going to slow demand, right? I was reading a piece of research, and it's like after mortgage rates get into that 8 to 10% range, it really starts to take a hit on home prices. So I think once you see some of those other asset classes really start to come down, the Fed will be able to ease off a little bit. But, I really think that the 75 was at minimum what they needed to do today. I don't think people would have been super upset if they did 100, honestly. It would have been an interesting scene to watch. But I think we're going to have to hike at least through September, and get that Fed funds rate up. I think their forecast of 1.75% is, what is needed, right? You can't print that much money like we did during COVID and not expect to have to subdue inflation like we are now.
Interesting. Yeah, for sure. There's a lot that they have to keep on doing. Do you think that a crashing market could deter them?
Well, I mean, I think that's their goal, right? Is they you kind of want to see that destruction take place. And I think that, if you look at where SPY was at pre-COVID, right, it's kind of a reality check, right? You understand that there's, Apple trading at a $3 billion market cap, right? You have to see these assets come down. That's what the Fed wants, right? But it's not just the stock market, right? You have to understand that there are other asset classes out there that also need to, right? Like, and home prices are one that have just been insane, right? You're seeing people that are really, maxed out in terms of their leverage on things, right? The Airbnb market was super, super hot. And I think that they need to work on not only the stock market, right? The stock market's had a pretty serious correction, right? I think at the current pace we're at, QQQ is on pace for its worst year ever, right? If we continued at this pace, QQQ would be down, I believe, 52% for the year, which would be, absolutely insane in terms of speed. So I think that they need to work on the other asset classes. And obviously, I think, rising interest rates on mortgages will definitely contribute towards that. But yeah, I mean, it's going to take a lot to get rid of this inflation. This is definitely, I think, something like we haven't obviously seen in a long time, right? I think this is the biggest rate hike in 30 years. So.
Yeah, it really is a lot that's been going on. Okay, we hit on definitely some good topics. One thing I'll extend to the audience is if anyone has a specific question that you do want to ask, you can feel free to go ahead and request and come up. I want to talk a little bit with you, Mans, about managing risk. If you kind of want to give an overview as to how you do that.
Yeah, absolutely. So, in this market, I find that really the easiest way to manage your risk in this market is to be a lot more sized down, right? And I talked about this a little bit earlier, but really the key to avoiding what most traders view as the worst, right, is you don't want to be out there risking. There were times maybe when the market was super hot with GME and AMC and stuff like that. People are risking 30, 40, 50% of their portfolios on things, right? And I think that right now you have to, one thing I put over my desk now is it says, don't try to do too much, right? Because I definitely like to take advantage of opportunities. And sometimes you need to check yourself and say, hey, like, for me, standard account size, trading size on a position is usually, it was 7 to 8% of my account at the time. That was probably more in the spring, though. As of recently, I've been in that 6 to 5% range, even on like higher confidence positions for me. If I'm trading something that's longer in terms of expiration, maybe I'll size in a little bit more, right, and move up to that, 15%. But really, I think the key in this market to managing your risk properly is, if you're trading options, moving farther out in terms of expiration, and understanding that you have to. It's even in this market, a stop loss is hard because the action out there, the price action is very, very trappy. And it's very easy to get faked out, and your stop gets hit, and then it goes in the direction that you were looking for, right? But the easiest way to avoid that and lower your stress level and manage your risk is to just size down. So like, maybe your old position size was 5% of your account. So now it's 2.5%, right? Or even less, right? It's really the don't do too much, don't try to do too much mentality. You're not going to, in this market, you're not going to make, 6, figures a day or whatever, right? You're not going to make $1 million in a week, right? Where some people were doing that when AMC and GME were happening. So they got these really toxic habits that now lead to you blowing an account up if you're not careful, right? So what you have to do now is really temper yourself and just size down, right? At the end of the day, that's the easiest fix.
Okay, perfect. Yeah, I mean, we can dive a little bit more into that in a second. For right quick, Jadzar, I saw you requested. Do you have any specific question that you'd like to ask?
I was just wondering if you guys were thinking we're going to be bullish in the next coming weeks, or we're going to continue downtrending.
Yeah, I mean, I guess we kind of touched on that. Mans, want to kind of sum up a little bit of what we've been saying there?
Yeah, so I think kind of what we've been talking about is that there's a couple really key levels to pay attention to. Obviously, Wolf referenced that anchored VWAP, and for me, it's really I couldn't tell from today, honestly. I still am kind of neutral on opinion. I think the easiest way to kind of gauge that is first, you definitely need to pay attention to yields, right? The 10-year yield is really important, but pay attention to that local low on QQQ of that 280 to 285 zone, and on SPY. That 385 level is going to be really, really important, right? So, if we can get a weekly close over that this week, I think we have a decent chance to see a relief rally. If we can't, then I think we'll see more downside.
Okay, perfect. Thank you, Jad, for the question. All right, Luis, do you have a question? Going once. Luis Cervantes.
Hey guys, can you guys hear me?
Yep.
Cool. Quick question. I'm just curious to know your perspective on the oil market. Just curious to know your trajectory, especially with the inflation rates going up.
Yeah, absolutely. So personally, here's how I kind of view the energy trade, and I think that's what it is. It's a trade. Personally, it's nothing that I would look at as a long opportunity, right? It's just like, for example, Occidental, right? It's kind of the name that's gotten the most attention because it's, Warren Buffett has bought so much of it. Personally, if you look at where it was during COVID, right? And I think that's really important is I'm a big look left person, right? When it comes to any type of asset or theme or sector, right? And if you look, I mean, this thing's up 300% in a year, right? And it's up almost 1,000% from COVID, right? COVID, it was trading in the $8 to $7 range, right? In 2020. And now you're looking at it trading, with a 7 handle, right? 773 as of, 2 weeks ago. So, personally, it's nothing that I would look at as a long trade. I don't think the chart looks that fantastic from a technical standpoint either. But, there's some people with a lot more money than I have that are long on it still. I just personally don't see opportunity long in energy right now.
Hey, Mans. I've been in your room. It's amazing. I think a lot of learnings for everyone. I just need to understand in terms of your hedging strategy for long-term portfolio. Do you do some kind of hedging? If not, then what do you recommend to people who can't be in front of screen all the time?
Yeah, no, that's absolutely a great question. You know what? Honestly, I don't think that I'm probably in a space to give the best long-term hedge advice because of the fact that I haven't been, a long-term investor, for more than 6 months, right? I'm really getting into long-term investing now, and those are definitely things that I want to explore more. I know that different funds have certain strategies that they use. Personally, for me, like I said, I don't think I could divest too deeply into that with a good acumen, right? I don't think I'm probably in the best space to talk about it because I haven't been, a long-term investor that long. But once I get into it, I'll definitely share my thoughts on Twitter for sure.
Yeah, thanks for being honest. Thanks.
Yeah, of course.
Cool. Stock market news. You got a question?
Yeah, first of all, I really appreciate that last answer. Everyone on FinTwit feels like they want to come out and be expert. But a lot of times you want to say the real answers and being real and learning and experience. So that is definitely cool. Being real is relatable, and I think that's the best thing on here. That's probably a big reason why your account has been blowing up, or at least, yeah. But some of the names sound a little familiar. I've been running that ARK Daily account for a little. I wanted to hear your thoughts on Kathy Wood and maybe ARK K, if that's a vehicle you've used to trade around a little.
Yeah, absolutely. I'll definitely, this is a topic I love talking about, honestly. So I think it's a very interesting thing, right? I think that you saw Wall Street and especially retail, I think it's kind of the poster child of this, speculation run that we've seen, right? You saw, something like ARK, right, which is where it was now in 2020, right, in that $30 range, make a run to 200, right? You're talking about 1,000% return in 18 months on an ETF, right, and an actively managed one. And what I think she's a tough one to get around because I do love the innovation vision that she has. I just think that some of it is very misguided in terms of the way that she tries to actively manage her fund when it seems like she, to me, and again, I'm not trying to be rude, all respect, right? Kathy, if you're listening, I'm sorry, but I just don't think she's got a great technical acumen. I don't think she has a very good understanding of, she was buying Zoom at 440, right? And I think that you need to, at some point, right, active money manager or not, when you have an investment, that's up 300% in under a year, is that, the best risk for your client's money at that point, right? So I think that, and she made that mistake several times where I was just like, I don't know how people are, trusting her with money when they're seeing her buy things that are, and I think maybe some of that is because she was a Tesla investor and that just worked, right? Because that thing squeezed for 18 months, right? And Tesla's a great company. And, she totally nailed that on the head. She was early. And it's a big reason why she saw the success she did. But I think she tried to carry that over to a lot of names that, didn't warrant the valuation, right?
Stock market, is anything else you want to add on to that?
Yeah, no, I definitely do agree with that. I've seen some looks into like, what if she didn't change her portfolio at all, didn't do any of those moves? Where would her portfolio be? And it's still down. Let's not be crazy, but it would definitely be higher than we're at now. So yeah, I definitely do agree. I like the underlying thesis. I like the underlying idea, but obviously she's gotten in her own way over the last little bit. So yeah, definitely. Also, I do like to add in on this stuff. This has been a fantastic spaces so far. We've been going for about 45 minutes. I won't be too long here, but just make sure you're following Mans up here. Make sure you're following Wolf Financial for doing 40 plus hours of live spaces this week. I almost dropped something there when I said your name, Mans. That's why I said that a little weird, but make sure you're checking all of them out. And yeah, fantastic spaces so far.
Sweet. Love it. All right. Hip, hip, Haresh. Do you have a question?
Yeah. What are your views on ESG and the energy markets, and if that's hurting, I guess our perspective to invest in the future?
In what context? Sorry, if you just want to expand on that a little bit.
Sorry, I didn't have my question ready yet, but like, what do
you need a minute?
Yeah,
you can take a minute and get your question together. All right, cool.
Yeah, no problem. I have a question in the meantime. Mans, you mentioned a couple of the stocks that were in your long portfolio were EVs, but I'm not sure I heard Tesla in there. I would love to hear your thoughts on kind of the current EV sector and who you think is going to make it, and whether there is a price that you would add Tesla in, or if you're bullish on some of the others for lower PEs, or just kind of what your thought process was around that.
Yeah, so I actually do have a little bit of Tesla at 600 in my Roth IRA, which I kind of forget about at times because I only had the Roth contributions for a little while, and then obviously had to move to a traditional IRA. But personally on Tesla, I think that they are going to be a leader in not just the EV space, but in a lot of spaces. I think that they'll definitely end up taking over, the commercial trucking as well. And I just think it's hard to, bet against a guy like Elon. I do think that it becomes attractive in the 500s, right? 550 has been like a major historical support, over the past, 2 years, basically, right? In that 530 to 550 range. That's an area I would look at it. It's obviously, it's definitely an expensive stock, right? They have a solid balance sheet. I mean, they absolutely killed earnings this past quarter. So, the fundamentals are solid, in my opinion. And, in that 500 range, it definitely becomes interesting to me, right?
Okay. Yeah. And how about to the others?
Yeah, no. So personally, I will say that my interest in Rivian comes from the fact that I think that Tesla will have its market, but I think that the Cybertruck is kind of one thing I don't really love that they're doing. Whereas I think that Rivian has the truck like nailed in terms of an EV truck, right? I mean, I've seen now a few in person. I'm starting to see a lot more actually, and I live on the East Coast. It's not like I live in like an EV, hotbed, right? But I live on the East Coast, not like in a crazy space that's filled with EVs. But the Rivian truck is definitely popping up a lot more. And I think that they're going to be the leader in that space, right? I don't think it's going to be the Ford Lightning or anything like that. I think that Rivian's got it on lock, and I think that they're at such a head start as far as functionality goes, that I think, with the cash they have, that they can be successful in the long term. And then I really do still like the aesthetic, and I think that Lucid's performance is just absolutely insane. So I think that having some exposure to those three is going to be my plan going forward. I think that we will see a society by 2030, 2035 where we are predominantly EV, right? And I actually, I know a lot of people think that Ford and GM will still be the leaders, but I personally think that some of these newer EV companies will be successful. And I know that there's a lot of differing opinions on that now, right? But I think that they can coexist. But I do think there's going to be, 3 or 4, long-term EV, right, players. And I think that, those 3 have a really good shot: Tesla, Rivian, Lucid.
Perfect. Okay, Free Alpha, what's up? Do you have a question?
Yo, what's up, guys? Not a specific market-related question, Mans, but what are your thoughts, Brady versus Lulu?
Dude, I love that question. Thank you for asking that. Dude, it's tough. So I'm if you follow me, I talk about it sometimes. I'm a huge clothes guy. It's the one thing that I do spend money on is clothes, because I don't know why, but I love Lulu pants. Personally, I think Brady does have the workout shirts on lock, so I definitely prefer some of the Brady brand stuff. I think it's about the same price as Lulu. It's to me totally worth the money. I think Tom's doing a great job. But I'll always be loyal to the Lulu pants forever, right? They're gonna have a place in my heart forever. But thank you for that question. I love that you asked that.
Yep, thank you.
Love it. Thanks, Free Alpha. All right, Powerhouse Trader, what's up? Do you have a question?
Yeah, hey man, how's it going, bud?
What's going on, brother?
Man, I've been with you since the beginning, and I just want to tell you, I really love what you've been doing with the 2,500 and the 10K and changing it up, and all the stuff you're doing with chicken trades. And I mean, y'all are evolving, and I'm 50. I mean, I'm twice your age. I'm 52, and
I love it, man.
I follow you every day. I think you've got real good instincts.
Man,
I hate that people are, people want to hate so quick, but any little thing. I know your trading has evolved over the last year because you've got so many people following you. I know that it's got to be hard to pull the trigger on stuff, all the times. You want to talk about that a little bit, because I know it frustrates you. You just don't always say it, but people need to chill on some of that stuff. But I know it's affected your trading somewhat. You want to talk about that a little bit?
Yeah, man. I'll talk on a little bit. It's interesting, right? As your following grows, in anything, and I've never had a platform like this in my life, but it's been an adjustment, right? And when I came into Twitter, people never caught flack for anything because the market was just crazy. Everybody was making money, right? And now, I stopped posting my trades publicly because of that flack that I started to get once the market slowed down. And moved exclusively to large caps. And now I think the biggest thing is, I'm just very selective. I try to share my insights. I usually don't post specific trades. I try not to. And you know what? If I'm going to post things, I just really do try to make sure that they are as high quality as possible, because I know that there's 90,000 people right behind a phone or a screen or anything like that. So I think responsibility is a huge thing. But yeah, in life, there's always going to be people that don't, that love you and hate you, right? And your job is to just kind of roll with the punches and stick with what you've been doing, right? Like my whole thing is, we put out, I think, some of the best content in the space, and I think it's progressing the space, and that's what drives me each day. So at the end of the day, that's just my goal.
Awesome. I appreciate that. And another thing, just to kind of put in your brain a little bit, is after we get through all this recession and all this other stuff that's going on, we ought to all get all the mans, all the
man,
boys. Let's get together in Vegas or something.
Yeah, man, that sounds like a blast.
Let's do a weekend with about 10 or 15,000 of us.
Sounds like a blast, man. Definitely.
Hey, man, I'm on board. Thanks, buddy.
Of course. Thank you, man.
I've got a follow up on the Twitter question, and
Yeah.
it's different lines. Just being on Twitter all day. I'm on Twitter maybe 8 to 10 hours a day usually, but a lot of that's on Spaces. And any of your ideas through Twitter? I guess kind of how do you support your trading with FinTwit?
Sorry, I missed the beginning of that question. You want to repeat that one? Sorry, just cut out.
Sorry, did I cut out there for a sec?
Yeah,
Okay.
at the beginning of the question. Sorry.
My Wi-Fi just went out. Not sure why. But basically, I was just asking kind of, we spend a lot of time on Twitter. Do you supplement, any of your ideas? Do you find any of them through Twitter? Are there specific people that you're following that maybe, by following certain people, you find ideas in their timeline? Just kind of seeing how FinTwit supplements your trading.
Yeah, absolutely. No, that's a great question. So, I follow a pretty select few people that I think put out quality stuff. Personally, I'm in front of a screen a lot of the day because I'm, live streaming on Voice or on YouTube Live, and I know what I'm good at. And so I don't usually have to, of course, when I was a beginner, of course, I was sourcing ideas from other people, right? Because that's how you start is you look around Twitter and you find your niche. But I think really one of the biggest things is, draw content from people that you respect and know are good at what they do. Like, again, I follow Jake from Transpider. He's always posting fantastic charts. Hugh Henney's fantastic from a fundamental and longer term standpoint too. There's a lot of, there's some really, really good, smart people on the app. And I love seeing, like, maybe I'll have an idea and then I'll see someone else is also on it. So that's confirmation, sometimes for me is I'll be like, oh, well, this guy's thinking about it. I think he's got a good head on his shoulders, right? And sometimes it's just that like added leg of confirmation at the end, But yeah, no, I try to just, fill my timeline with his, I don't have too much time to scroll through Twitter anymore. Sometimes after market I do, but it's a great place to, source confirmation for your ideas and participate actively in discussion and content and, really just trying to, I always think about it this way: is there's somebody that is in the exact same position I was in 2 years ago on the other end of a phone somewhere. And I try to put out things that I would see as helpful, right? Or participate in conversations with other people, right? That, I would see as helpful to a beginner that is trying to find its way, right?
Yeah, what are some of those things you think that a lot of beginner traders need to hear?
So really, I made like a whole video on this. It's on my YouTube if you want to check it out. But I thought about that question a lot because I'm like, where would I start if I literally knew nothing? I think the chart is super important, right? If you just try to come into trading with no understanding of the technicals, you're going to get destroyed, in this market especially. So you need to, spend some time, right? Like, download Webull desktop and go and play around and see if you can, at its basic level, right? Is like, go and find out where people like to buy a stock and where people like to sell a stock on the daily chart, right? And just start there and be like, okay, well, people buy it here and people sell it here. And that's going to lead you down a path of, noticing that on different time frames and understanding momentum and, where opportunities lie. So I think that's a fantastic, like, very, organic place to start.
Okay. Yeah, definitely got to start somewhere. Regarding actual indicators beyond the basic, support and resistance that we were talking about, are there other indicators that you're using? Perhaps, moving averages, squeezes, things along those lines?
Sure. So I'm actually pretty big. I don't use a ton of indicators, right? So intraday, if I'm scalping, obviously I'm gonna have VWAP up. Even VWAP now is not like a humongous thing for me. I mean, I still use it, right? Because I know it can be a point of, confluence for a lot of people. I use the 9 EMA a little bit, again, intraday, right, as an additional point of confirmation. But truly, I think once you've gotten, X amount of hours of screen time in, it really becomes about the price action and being able to read the tape is a big one, right? You need to know how to read level 2 and read the order book, right? And understand, okay, when you're seeing big prints come through at certain key support and resistance levels, right? That is, in my opinion, if I could only pick 3 things to trade with, right? It'd be the level 2, the tape, and really, I think that you could trade successfully with those things, right? I personally don't use a lot of indicators. That's just me, though, right? Everyone's brain is different. So, but for my brain and the way that I trade, I can, do most of it with the basics, right?
Got it. Got it. Okay. I think we have a couple more people that came up with some questions. First, I'll go back to you, Hip Hip Paresh. Do you have your question?
Yeah.
All right. Hearing none. Oh, there you go.
Yeah. My question was concerning with the Biden administration tightening on oil and gas industry, and then further, some of the environmental groups are suing the administration for the new permits and leases that's been released. So I'm wondering what are your takes and views on ESG affecting the energy markets, and if we do pursue more greener future energy market, how much will that impact the energy market? Is it just a big burden just to go go green because of the short term, or is it worth it in the long term?
Yeah, sure. So I'll say this. So I'm not particularly, again, an expert on the policy and the political landscape surrounding the energy market right now, right? And I'm not going to pretend to be an expert that I'm not on something like policy. I know that Biden has made some decisions that have obviously affected our oil prices, and at the end of the day, where I personally see a lot of the future of energy being is in the solar space. I think that eventually, I don't think in 2080, right, that oil is going to be where it is now. I think that's why you're seeing solar companies trade at the valuation that they do, because the growth is insane. And I think that you're going to see solar become probably the predominant, source in the future. Obviously at whatever scale, right? But I still think that you'll see solar be a major part of our energy future. So again, I don't want to comment too much on the environmental policy and the political landscape surrounding it too much, because I'm, again, not an expert on it. But that's kind of my thoughts on it.
Okay, perfect.
Thank
All
you.
right, we got about 3 minutes left here, so I see one more question. And then one question that I had is, are there any other tools that you're using or platforms to supplement? I think you mentioned Webull. Are there any other things that you're using?
Yeah, so long-term portfolio and Roth are in TD Ameritrade as far as broker goes. And then I have so many Webull accounts, but no, I have Webull is fantastic. Broker especially for beginners. I personally love the user interface. The UI is great, so I love it. And I'm definitely a big proponent of them. I'm not sponsored by them or anything like that. So I think they're a fantastic broker as far as if you're trying to short-term trade. I definitely think flow is important when the market is hot too. Like right now, it's not as hot, but there's some flow you should be paying attention to. It's a little bit trickier now than it used to be. Again, lower liquidity, but Cheddar Flow, a great platform that I personally use right now to read flow and things like that. And again, those are kind of the primary things that I'm using on a daily basis.
Perfect. Okay, and the last question I'll direct to Wall Street Cody.
I really don't have a question. I just want to say, man, you've done a great job. I've been there since day one. I go underneath a different Twitter account. I'm not going to say which one, but I've been there since day one, man. I don't know if I can cuss, but you've been fucking killing it since day one. That's all I wanted to say.
Thank you, man. I appreciate that. And I respect that. And I first off, I want to say thank you to everyone that's expressed that, because it can be a lot of times, but I really do appreciate the kind words. It means a lot, guys.
Love it. Okay, so I think we'll wrap up here. Last minute, Leif, or who'll be here for our next session's already up here. So, Mance, I first off just want to thank you for coming on, taking the hour out of your time to set this up honestly pretty quickly and get this going. We obviously hope to get you back on some more Twitter Spaces moving forward. I know you're busy during the day, but maybe some evenings for some market sentiment and stuff like that. Anything else you want to share on this one, and maybe just share where else people can find your content?
Yeah, absolutely. So, make sure you follow me on here, obviously, first, if you don't already. YouTube is all my full-length videos, guys. There's obviously I do have a paid room and things like that, but I'm a huge person on putting out free content. So there's a ton of free stuff on my YouTube, 20 plus educational videos that'll help you get started. And then on my TikTok, I'm posting a lot of short clips there too. So, for the younger crowd, Mans Trades on TikTok, or actually Stocks with Mans on TikTok. Everywhere else is just Mans Trades. And I really appreciate you guys having me. I would love to do some in the future. And thanks everybody for listening. I always appreciate it.
Sounds good, man. Enjoy the rest of your evening.
You as well, guys. Take it easy.
All right, perfect. Everybody, there you go. You heard from Mans. If not already following, you can go check him out at Not Mr.